Good evening, friends. Welcome to weekly view on markets. Last week, I had drawn the support and resistance line on Nifty daily chart. I have retained the same uh, support and resistance line for this week also. As per our expectation of the last week, Nifty has given a rally during this week, and on last Thursday and Friday, Nifty saw selling pressure at the resistance line. You can see on the chart here. So the Nifty is likely to consolidate around this level. That is what the chart structure suggests. And after that, Nifty may break out about 17,500. And when Nifty breaks out and closes about 17,500, the next up move may take Nifty to 18,000 level. That is the chart structure is suggesting at this point of time. Now, any correction between this range, the support and resistance, that is 17,500 and 16,800, in this range, will be a good buying opportunity for investors and traders. And this small correction should not be looked as upon a bearish sentiment. It is a kind of consolidation in the ongoing uptrend. If Nifty closes below 16,400, this is the higher bottom that is made. If it closes about below 16,400, then the chart structure will turn bearish. So at present, I don't expect that Nifty may go down to this level. So by looking at the chart structure, the rally is very strong, and there is bullish undercurrent in the broader markets as well. And we can see this green line, which is a weekly moving average, is much higher than the red line, which is a monthly moving average. This shows the bullish sentiment in the market. The bullish sentiment in the market is supported by broader markets as well. So Nifty has closed with a gain of 1.39% for this week. Mid caps have gained 2.11%. Small cap has gained 1.6% for this week. The broader market represented by mid cap and small cap have outperformed during this week. And all sectors have gained, except reality sector. All other sectors have gained this week. They ended in green with 1 to 2% gain. So that means mm, there is buying in all sectors and in large cap, mid cap, and small cap sectors. So that is why I say the bullish sentiment is very strong. FIIs, they have stopped selling and they have started buying in last from last 2 weeks. So these are all the positive indicators. But having said this, the volatility in the market has gone up very sharply. During this week, the volatility index, that is India-VIX, has gone up by 14.2%, and it has closed at 18.9, which is at an elevated level of 18.9. So this indicates that volatility in the market may be high in the coming days also. Why I am saying, expressing so much bullish sentiment in the market? The market is supported by the fundamentals also. The chart structure, whatever bullish chart structure we are seeing, uptrend we are seeing on the chart, it is supported by the macroeconomic fundamentals as well. So we will talk about some of the fundamental factors. The auto sales for the month of July was up for all vehicle segments. So And GST collection for the month of July has come above 1.4 lakh crore. This is the fourth successive month where GST collections are above 1.4 lakh crore. That shows a good industrial and production activity in the economy. Manufacturing PMI has come for the month of July has come at 56.4, which is 9 years high. And services PMI data, which was 59.2 for June, has slightly come down at 55.5 for the month of July. Still, it is in the expansion range. So, generally, the manufacturing and services sectors are doing well. That is what the figures are indicating. There was RBI policy during this week. So RBI has raised repo rate by 50 basis point, and RBI has told in their policy statement that they will keep an eye on inflation. They will support the growth in economy, and also they will have a calibrated approach while reducing the liquidity in the market. So this must be a good confidence booster for the markets. And RBI has estimated GDP growth for FY23 at 7.2. So India is one of the fastest growing large economies, and comparing to many other our neighboring countries like Pakistan, Sri Lanka, uh, and Bangladesh, Brazil, all these countries, Indian economy has got strong fundamentals and is doing better. Oil prices have cooled down and they have come below $100 per barrel. And at the weekend, it was around 95 USD per barrel. And monsoon is progressing widespread and the rainfall is good. So these are all the positives for the Indian economy. And these factors are likely to boost demand and growth in the earnings of the companies in coming quarters. The quarterly results so far have been good for manufacturing sectors, specialty chemicals, and many other mid and small cap companies have shown strong earnings growth during the quarterly results so far. With the strong economic fundamentals and the inflation having peaked out about a month ago, the food prices, commodity prices have started falling, and in future the inflation may remain stable or there may be a decrease. And when RBI has raised repo rate by 50 basis points, it was in line with the market expectation and there was no adverse reaction in the markets on last Friday. And market always tries to price in the future earning growth of the companies. So by looking at the macro fundamentals and high frequency indicators, it appears that the earnings of the companies in next 2 quarters will be better than what it is at present. So this is what market is trying to price in. This is what FIIs are looking at, and they have been buying in the market. So all these things put together, I expect the positive move or the positive momentum in the market is likely to continue with small corrections and consolidation in between. The risk comes from development on China, Taiwan, and Russia Ukraine war. Some sudden development may happen, and that may send all these global markets into a correction mode. But as Indian economic fundamentals are quite strong and sound, so any major correction due to global factors will be excellent buying opportunity for Indian investors. So if you invest during sharp corrections, you can expect very good returns in next 2 to 3 years. So this is all in this week's market view. Happy investing. Thank you, friends.